Good morning, everybody. Thank you so much for joining today's webinar. Today, we will be going over understanding closing costs and how to read important loan disclosures. My name is Allison Mangum, and I have been with Canyon View for 2 years now. I've been in real estate about 8 years. If you have any questions during the content of this webinar, we do have a chat and questions feature. You can also circle back and reach out to me via my cell phone, through text message. You can give me an office phone call or reach out via email. So now we are going to go over the table of contents. So today we were going to learn about fees associated with the loan, so down payment and closing costs and loan features, as well as unexpected or unknown fees that are charged before closing, and then finally how to read important disclosures such as the loan estimate and closing disclosure. So to get started, what are closing costs? So closing costs is the sum of all fees and charges that are due at time of signing. This finalizes the sale and transfers the ownership from the seller to you, the buyer. Closing costs are fees paid to complete the home purchase, covering lender charges such as origination fees, underwriting fees, and processing fees. These also include third-party services such as appraisal, which will determine the value of the home, title, credit report, as well as other inspections, prepaid items like property taxes, home insurance, mortgage insurance, and finally government recording fees to get your name on title with the state. So to get started, what is a down payment? So a down payment is your part of the closing cost that is paid out of your own pocket. This will reduce the overall loan amount needed. Down payment requirements vary from loan program and lender. Canyon View has a unique program, our first time buyer, which requires a minimum of $1,500 to come from your own bank account. We can also originate loans ranging as little as 3% all the way up to 20% or more. If you have any questions about down payments, feel free to reach out to me after the webinar. Next, we have what are loan costs. So we're going to split this up into two sections. This first part are fees paid to the lender. So common fees are origination, processing, underwriting, and tax services. This helps me and my team originate and write the loan and continue to help other members buy homes in the state of Utah. Other loan fees are discount points. This is optional and a way to reduce or get a lower interest rate. Appraisal charges. This is a third-party report that a licensed professional will determine the property value based off of the recent comparable sales, home condition, home size, and location. The last common mortgage fee is a credit report. We need to pull your credit to determine the eligibility and qualification for a mortgage, and we will monitor the credit to make sure that you don't go buy another property before we close the loan. So those are the common fees. The other fees that we will charge that go to other service providers, as well as myself, the lender, are title fees. This makes sure that the seller is able to sell the property to you. It makes and verifies that there's no unpaid contractor liens that the seller needs to take care of before you become the legal owner. There's government fees, which again puts your name on title with the county, so changing ownership information. We will collect prepaids. So this is your first year of homeowners insurance from day of closing till the next year's due, as well as interest paid to us or your lender. When you close a mortgage, interest is paid in arrear, and so that's why we collect a little bit up front. If Canyon View is going to have an escrow account for you, or you want us to service your property taxes and homeowners insurance dues every year, we will collect a little bit of a cushion to set up that account to make sure we have enough money saved for every year. And then other fees are HOAs. So if you are in Daybreak and you're buying a house up there, there's HOA fees associated, such as transfer cost, assessment fees. There's also realtor fees and brokers that you want to watch out for. Now that we know what some of the closing costs are, who can pay for them? So most loan programs have a minimum borrower contribution. Canyon View, we have a $1,500 minimum borrower contribution for our 100% first-time buyer program. Other people that can contribute to closing costs are the seller of the property. They can help pay for some of those closing costs, as well as gifts from family or friends. There are requirements that go along with gifts and seller concessions. If you have any specific questions on those, please reach out to me after the webinar. There are some loan costs that are upfront collected that you don't normally expect, or we don't typically chat about it until you're in the mortgage process. The first one is earnest money. The earnest money deposit is a good faith payment to the seller, showing that you're serious in buying their house. This can typically be refunded up to a certain date or time frame, just depending on what your contract stipulates. So please chat with your real estate agent about this for further details, how much you want to contribute and that sort of thing. Another unexpected upfront cost is the appraisal fee. So you as the buyer are charged this service before closing because we, the lender, need the appraisal report to be completed before the underwriter can give final approval. The appraisal determines the value of the property and really shows us how much we can lend. This fee can range from as little as $250 a month up to $1,000 or more, depending on the type of appraisal, the property characteristics, and scope of the project. If you have any questions, again, please reach out. Other charges that are collected upfront that are not credited towards the closing costs of the loan are inspection fees. So when you are under contract as a buyer, you want to make sure that the property you're about to purchase is up to code and is safe to reside in. You want to pay a licensed home inspector to go out to the property to inspect that there's no plumbing, electrical, foundation issues. You want to test for radon and other things that can go on in the home that can make it unsafe. The inspector will provide a list of items that they find. You as the buyer can use this report to help negotiate a good contract or plan for future remodels. The inspection fee can range from, again, $150 to $1,000 or more, depending on the service rendered. This does not go towards the loan as a part of your due diligence. So there's two major disclosures that show a total cost of the loan. The first document is the loan estimate, and the second is the loan closing disclosure. The loan estimate will be provided to you 3 days after a complete application has been submitted. This will give you the overall breakdown of how much the loan is actually going to cost. Receiving the loan estimate is not a commitment to lend, nor is it binding. And so it just basically says, hey, if you go with us, this is how much it's going to cost. This top section goes over your information as the borrower and the lender information. So it'll show the date issued, the property address, the sales price of the home, the loan term, the loan purchase and product, what type of loan it is, whether it's conventional, VA, FHA, as well as if the rate is locked or not. The second section goes over loan terms. So the loan amount of how much you're borrowing, the interest rate of the loan, the monthly principal and interest, as well as prepayment and balloon payment information. This middle section is the payment breakdown. So it'll show the principal and interest, if there's mortgage insurance being included in the loan, estimated escrow, so your property taxes and home insurance. It'll give you a breakdown as well as if you are escrowing, what is included in that escrow account. The bottom part of this section is the closing costs. The top tab, or the estimated closing costs, is the summary of all of the itemized fees. The estimated cash to close is your responsibility as the borrower. The closing disclosure is the second formal loan document that you will receive towards closing. It is very similar to the loan estimate. It's just labeled a tad differently. So again, top section goes over your information as the borrower, my information as the lender, and loan information. Loan terms, so your loan amount, interest rate, monthly principal and interest payments, prepayment penalties, and balloon payment options. If this changed, you should be receiving change of circumstance documents, but this should match the loan estimate pretty close. The projected payments will also show you a more finalized breakdown of what you are charged monthly for your loan, and final closing costs due at closing. Again, the top tab of closing costs shows the total itemized breakdown, and then the cash to close is your responsibility as the borrower. Next, we're going to page 2 of the loan estimate and the closing disclosure. This is where everything that we talked about at the beginning of the webinar will be itemized. The top section, or section A, goes over origination charges and lender fees. This is also where you'll see discount points listed. Section B is where you will see your title or your appraisals, credit reports, tax services. Section C is your title fees. D is a subtotal between all of those costs. Section E goes over those government recording fees. Prepaids is section F, showing how much is being collected for your first year of homeowners insurance, taxes, prepaid interest. G is your initial escrow payment at closing. So if you wanted Canyon View to service your escrow account, this is where that cushion setup will be shown. And section H is other charges. So where you will see your HOA, realtor, and broker fees.
Welcome to the webinar.
On section I, we'll have another subtotal. J is the closing costs added between D and I, and lender credits will be shown at the bottom. This bottom line will also match the bottom line on page 1. The last page of the loan estimate and closing disclosure goes over additional information, such as the lender information, my information. So if you needed to get in contact with me, you can. It will show you the comparison, so your APR or your annual percentage rate and total interest percentage, as well as late payment information, servicing information. This will show who keeps the rights and who you make your payments to. And again, by signing that you received the loan estimate and closing disclosure is not binding nor commitment to lend, you still need to make sure that the underwriter reviews and gives her final approval before we can get to closing. Are there any questions or concerns now that we are into Q&A? We have somebody asking if they need to order an inspection and what is the benefit of an inspection. You do not have to order an inspection, but it is highly encouraged because we don't want you to be making the biggest investment of your life only to find out there's foundation issues or there's a sewer line crack. Those sorts of repairs can cost you a lot of money at the end of the day, and we want to avoid that. We want to make sure that real estate puts you into generational wealth and building your investment portfolio, not hindering it. But that is a great question. If you have questions about anything that I have gone over in this webinar, feel free to reach out to me again. My contact information is on the screen. My office line is the top one. My cell phone, I can be reached via text, even on the weekends. And my email is also listed. If I am unavailable, feel free to give our mortgage line a call, and any member of my team will be more than happy to help you. Thank you so much for your viewing. And if you have any questions, feel free to reach out. Thank you so much.